Start the engines. It's time to see how European manufacturing is faring. Sarah and Nina are here to talk us through what markets are expecting. And Sarah, Eurozone PMIs come out next week. What are you looking out for?
I think the key focus here will be looking for signs of continued recovery in the Eurozone. And we just had the fourth quarter GDP data out for last year, and they're a bit better than expected. So we're definitely seeing some green shoots, and people will be looking to see if that continued into 2014. And expectations are pretty good. We're seeing a pickup, likely to see a pickup in both manufacturing and services. So
a continued pickup, but services seems to be a little bit subdued. They're both in expansion territory, so continuing to see more of that. And leading indicators have been quite promising as well, but industrial production was a bit soft at the end of December.
Well, maybe some encouraging news from Europe for once.
Yes, but I think I just want to add one last point to this. So this is important in terms of the ECB rate-setting meeting in March. If we have really good data, this could deter the ECB from cutting rates further. So we have to keep that in mind as well.
Draghi has said, want to see more evidence of what's going on.
Okay, excellent. Well, we have similarly good news in the UK. Unemployment data is coming out. Is that right, Nina?
We do have unemployment data, and it's expected to probably maybe tick down to 7%, that threshold, well, the BOE's been looking at for a while. Some people think it might even tick slightly higher, but overall, overall indicators are that it's moving in the right direction, that it's definitely improving. And that brings us to the BOE's forward guidance part 2.
Yeah, I mean, unemployment was the variable that they were looking at, but that's changed a little bit. What are the Bank of England really focusing on now?
Well, I think what Kanye reiterated so many times is spare capacity. They need this spare capacity to be absorbed in the labor market. And we're still looking at, like, wages aren't really improving as much. So we're not just looking at the unemployment data and the unemployment rate anymore. We're looking at labor productivity, wages, output curve, inflation, so many other things. So,
but the bottom line seems to be still that interest rates here in the UK probably on hold at a low level for some time to come. Is that right?
Yeah.
So even if that 7% that people were watching for, even if that is hit soon, yes, rates are likely to continue to stay low because there's this fuzzy guidance that's in place.
Right, okay. Over in the US, we've got FOMC minutes. What will you be looking out for there, Sarah?
Well, we just had the Yellen testimony earlier this week, so we sort of know what the Fed is looking at right now. So for the most part, the minutes will probably show that the FOMC is sort of on autopilot in terms of tapering the quantitative easing program. One interesting bit here could also be in terms of this unemployment threshold. The Fed has a 6.5% unemployment threshold before considering raising rates.
Right.
They could maybe have had a discussion about scrapping that and instead focusing more on inflation. So we should definitely be looking out for that.
Okay, be interesting to see what their focus is.
And also BOE minutes as well.
Oh, right, yes, okay.
Yeah, that brings us to that as well. So we'll be looking for what the consensus was in terms of forward guidance, the new forward guidance that's in place, how unanimous the decision was to introduce that.
Okay, pretty interesting week then to see how central banks are thinking. Let's switch quickly to the corporate front, and yogurt will be in the news next week. Is that right, Nina?
Well, yes. Danone reports their full year results next week, and they're not only known for their dairy business as well, they're known for their baby foods products, and they've had a torrid time of late because of that. The infant formula business has suffered last year because of issues in China.
Right.
Sales were slammed because of Danone's key supplier out there issuing a food safety warning. So they're trying to build credibility, trying to build market share again, but that is likely to continue to be sort of an overhang on sentiment, a negative overhang into 2014. But what investors are wanting to see is how that recovery is playing out, what the visibility on the recovery is.
Right.
But back to dairy, again, a bit difficult there. A lot of competition in the US. Recovery in Western Europe's not that strong, and milk prices are also on the rise as well. So have to watch and see what that brings.
Okay, could be baby steps for Danone, it seems. Thanks, guys.